A very good morning to all of you. So today we are going to discuss about financial accounting basics. Okay, basically the meaning of financial accounting, the users and the objective of financial accounting. So as we all know that accounting is described as the language of business, right? So financial accounting is important part of it. It is associated with recording, classifying, and summarizing financial transactions and preparing statements related to business according to generally accepted accounting concepts and conventions. So, in the later videos, we are going to discuss about the accounting concepts and conventions using which we are going to make our financial statements. Okay. So, the concept of financial accounting. Okay, in general way, financial accounting is the statement of information about a business or other type of organization. So yes, it is a information. Okay, like for example, if there is a company, they have to share their financial information to the users, right? Who are the users of the financial accounting or the financial statements? Suppose the creditors, the government, the customers. Okay, they also have different users like the internal users as well as the external users. We will go through it. So the main purpose of the financial accounting is what? The main purpose of financial accounting is to ascertain whether the business concern, or we can say whether the business is facing loss or profit. Okay, so through the financial statements, we can come to know whether the business is gaining some kind of profit or not. So the main function is what then of the financial accounting? To let us know, to let the company itself and and let the customers and the users of financial accounting to know that this particular business is in profit or loss. Next comes to the user of accounting information. Users of accounting information means who uses such kind of information. Okay, suppose a business have prepared their financial statements. What comes under financial statements? Suppose their income statement, profit and loss statement, okay, their balance sheet, their cash flow statements. So who are going to use it? Definitely there may be someone who will use it, right? So we have divided the users into two groups. One is external, another one is internal. Now, what does external mean? See, external users means that those users who are not directly involved in the business or directly involved in the running the organization. Okay, they may be the lenders, the regulators, the investors, the creditors, the suppliers. Okay, these all are what? These all are the outsiders. They are not directly involved in running the business, but somehow they are sharing something over there, right? Suppose, for example, the government. Okay, the government may want to know the information of the company regarding the financial information. Why? Because they have to charge tax, right? So, similarly, for example, the investors. Okay, investors. Now, why the investors want to know the financial information of the company? Because they're investing in the company, right? So, they have the right to know whether this particular company is profitable or not. If it's not profitable, then why should they invest? Because ultimately all are investing in the company because they want some kind of profit out of it, right? They are always investing in a profit making company, neither in any loss making company over there. So the outsiders, okay, need their financial information. They uses the financial information of the company for their own use. Next one comes the internal users. Now, who are the internal users? Internal users means that who are directly involved in the running business. Okay, who are running the business. For example, the manager, the owner, the employee. Okay, now why the manager, the owner, the employee? They have to know the financial statements, the financial position of the company, isn't it? They have to know where they are lying now, and they have to find out where the deviations are, okay, where they are lagging behind, so that they can come up with some new ideas and some new things, so that they can cover up, right? They can grow up. So for example, we can say manager are the primary users. Okay, they are the primary users of financial statement because they need the information to do their job. Yes, because they have to make certain kind of decisions using this financial information. Okay, so they have to make decisions such as whether to add debt or how to maintain cash flow. Okay, so they have to make such kind of decision by looking into the financial statement or financial report of the company. Fine. Now, for example, the owner. Why will the owner use? Now, owner can use the statement to evaluate whether their investment is safe and whether the company is providing an acceptable return to their money or not. Okay, the owner, who is the owner, who is owing the business, who is investing more, right? So they have to know whether this investment is safe or not, whether they are in a profitable position or not, whether they are getting something in return or not. If they are not getting any return, they can wind it up, right? So last one comes the employees. Okay, yes, obviously the employees need, right? Who are the employees? For example, such as the accountant or finance department are the users of financial statements. Okay, why? Because it's the part of their job, right? So if other employees have to access the information, they can help them judge whether the firm is in good shape or it is time to jump ship, right? Last one comes the objective of accounting. So we all know that what are the main objectives of accounting? The first thing is to keep systematic records, right? Systematic records means transactions of each and every day. Say for example, we are making the financial statements for one whole year. We can't remember the transactions for each and every day, each and every single day, right? So we have to maintain the records over there, right? Each and every day transactions has to be recorded systematically, day 1, day 2, day 3, like that. Okay, to protect the business properties. Okay, then to ascertain the operational profit or loss, to come to know whether the firm or the business is facing certain kind of profit or loss, what is the financial position of the business, and to facilitate rational decision making. See, whenever we are making the financial statement, it helps us in making certain kind of decision, whether it's an external user or whether it's an internal user. It doesn't matter. For example, when we are talking about the external users, suppose the shareholders who are investing in the company, they are using the financial statements or the financial records of the company. Why? They are using it to make certain decision over there, right? What kind of decision? The decision is that whether they want to invest in that particular company or not, whether they are providing some kind of profit or not, right? This is the decision they have to make. Let's take another example of the internal users. Suppose the internal user is the manager. Okay, so the manager have to decide whether to take certain kind of more debts or not from outside. Okay, so by looking at the statement, they have to make such kind of decision. So these are the objectives of our accounting. Basic things are this. Okay, so again we have branches of accounting. We have different branches of accounting. So first one is the financial accounting, cost accounting, management accounting. Okay, we will go through this one by one in our next PPT, in our next video. So thank you so much for this particular video. Thank you.